Okay, brilliant. So what we're going to do now, guys, once we've got all of this set up here, remember, everyone should have saved their template. Once you've put all of this information on, right click, we go to template, right? And we save the template, right? But then now what we're looking at is we're putting the template on. So this is the template. This one, we haven't put it on yet. And this is really important. I'm going to show you
Marlon,
how.
Marlon, sorry, I don't know if it's just me, but you're very tiny on my screen.
I'm not sure. I think I'm a big boy, but let's see.
Your view.
Okay, I'm not sure.
Is it my view or is it Marlon's view?
Your view. So do full screen, maybe top right where it says view.
Yeah.
And then if you choose full screen.
Top right, what says view?
Yeah.
No, can't see.
You see view? What computer have you got?
I've got PC.
Okay, so if you go on to Zoom, say no, the Zoom, yeah.
Mm-hmm.
If you're on the PC, you go to Zoom, and then you should just click on. You should just click on it, and it should make. You should in the. Let me tell you now. When I did it earlier, where's that other one? What you could do is come out and then come back in. I'll wait for you. Just come out and then come back in. Yeah.
Okay. All right. You're very tiny. Sorry.
Yeah. Come out and then come back in.
Can you start the recording again, Marlon?
Yeah. No, it's recording. Yeah. So guys, this bit here is what we call exposure. You have already been sent the exposure, but I'm going to leave that for now. Okay.
You told her you're going to wait for her, didn't you?
Say that again.
You told her that you were going to wait for her to come back.
Yeah. You know, I said I'm going to leave. I'm going to leave the exposure for now. Yeah, and we'll come back to the exposure.
What exposure? I didn't see no exposure.
Yeah, no, there were 3 folders, and one of them was the exposure indicator. But I will have to. I'll show you how to do this one next week. But for now, the reason why I make sure I put this on is because you know, it tells you which trade you're in. It tells you like how much buy and how much sell and how much profit you're in. Yeah, so it sort of helps you to see the trades, because sometimes you might be in so many trades and you don't even realize which one. But then this will then point out every single trade that you're in. So, you know, you will know that I'm in this one, in that one. So if you miss that chart, if that chart got cut off, you will see it there. So that's the whole point of having it there, but also it helps you to see your balance and what sort of risk you're on so far. But ultimately, now, guys, this is where we are now. Now, first thing, step 1, we need to make sure that if we're looking for a buy trade, okay? So what I'm going to do, I'm just going to write this down now. Okay, I'm going to write it here. So for a buy trade, yeah? So I'm going to put all the different steps now. Okay? So looking for a buy trade. Okay? Of course, remember, you can always look at basically, you know, if you're considering like you want to do sell and buy as well. Okay? Right, so we're looking for a buy trade. Now, the first thing we'll do, we'll look to see that the blue is above the 0. Okay, so right, so we're looking for the blue above the 0. So we're looking at the different bits, yeah. Also, so we're gonna look from step 1 to step 2. So step 1, this is when we're looking at the chart, though, you know. Okay, all right. So this is from looking at the chart. So step 1, okay. So step 1, what we're looking for, so can it do that? So step 1, you need to see the QE must be, yeah, above 0. Okay, when we say 0, we're talking about this line here. Okay, when we say above 0, we're talking about this line here. There's a line, this line here, it must be above 0 if we're looking for buy. So all we'll be looking to, from this thing is above, then we're looking for buys only. Okay, looking for buying opportunities. All right, that's step one. Yeah.
Don't understand.
Say it again.
Don't understand that.
You don't understand. Okay, so what we're looking for buy, but you see the line? That's a zero mark there. See there? That's a zero.
Yellow line, yeah.
Yeah, that yellow line going across there. It needs to, this indicator here must be above it for you to look for buy.
Yep.
Okay. Yep. Now the next one is the TRIX 55 must also be above zero, because this is, remember, you know, we've got over 10,000 stocks that we can trade, and we can't trade all of them. But what we want is something that's going to help us, not to just jump into every single trade that we see. We need to see the TRIX. Okay, step 2. Yeah, just put this one on here. Okay. Okay, step 2. Yeah. TRIX must be above zero as well. Okay. So TRIX. Yeah. Indicator must be above zero. Now, can we see the zero line? There's a zero line. That this here is a zero line. Can you look across? You can see this. It must go above that line, the zero. It must be. So all we're looking for is, so once it's above and that's above, then we're only looking for buy. Okay? No. Okay. So what we're going to do now, the next stage now is, this is the moving average. Okay? This is the moving average. This is what we call, this is the average of median. Okay? We want the candles to either be touching, the candles must close above, like this one here, close above. Close above. We want the candles need to be closing above the average median line, this average of median line, this 200 median line. The candles needs to be above it. You understand? Right, because that's what we're looking for. We're looking to trade with the trend, because the trend is your friend. Okay, so this is what we're going to do now. So step 2 now. So step 3. Okay. So what we're looking for now, okay, is so step 3. What we want to see is that, yeah, the candles must close above this line here. We call it this average median. This line here, we call it the average median, yeah, line, yeah. So the average, let me see, average median, yeah.
Ellen, above.
Yeah. Yeah,
Sorry,
above.
just
Yeah.
a bit of clarification on that. When you say closing above, are you
Meaning it's either going to be above it or it must close above it. So it should either be above it, but it must either be closing above it, because sometimes.
So what does closing mean above it?
Okay, you see this green line here? Let me show you.
Yeah.
See the green one here? You see this one here? This green one here, it close above, because the high, because remember we close above. So in terms of, if this one here close below, this red one here close below. Yeah, so this red one here that I'm over now, this red one right here, you can see that cross here, it closed below.
Maybe make the screen larger so you can see the candles.
Okay, yeah, let's make a bit. Yeah. So you see this one here? That one closed below this line. But this one here close above that line. You see what I'm saying? So I would take this one. Yeah. Right. So, all right. So basically, so what we've got now is this now. So that's my step 3. We want to make sure that the candle close above the average median, which is this one. So now that we know, and this is for the, what we call the stocks mainly. You know, you don't want to try anything, don't want to try to in crypto or anything. You want it to be with stocks, because stocks respect the 200-day moving average. Okay. Now, the next thing we're looking for now, because sometimes we can get a signal using this line. Now, this one here is the average penetration histogram. Say, for example, you get your first blue, or so you can either take it using the first green dot or the first blue dot. Now, of course, you see this green dot here? It basically, it repaints, meaning that you might get a green dot there, you might get a green dot there, you might get a green dot there. So what you want to do to sort of help you with that is to make sure that when you get the green dot, you've also got a blue dot as well, a blue line coming above the 0, because this point here is 0. Okay, so let's put the next one in, because this is what we're looking for. If we don't see these things, we're not going to take the trade. So we're looking for a green dot corresponding at the same time we're getting a blue line closing above from the average penetration histogram. Okay, so step 4 now. So so this is to help us with our entry. So enter into the trade. So this is what we call entry now, right? So entry. So the entry, either you're going to use the green dot slash, blue, the blue line, which is the average penetration. So let me not use blue, but let me use, we know can we see the red? Can you establish the green that I'm talking about? These are the green dots, yeah?
Yeah.
And these are the blue lines closing above.
Yeah.
So do you want me to call it average penetration histogram, or you want me to call it the blue lines closing above? Which one do you want it as? You want me to say average penetration histogram?
The lines are
Average penetration.
Okay, yeah. So either green dots slash, and also and then we're going to put average. Yeah. Blue line above 0. Okay. So this is the next one. Now, literally, you can literally basically save these to each of your sectors, each of your profile. So you could literally save this. So if you right click and then go to save template, every single template that you go on, and if you basically, no matter if you it moves, we have to use the other one so it will stay there all the time. Let me use the other one. So we're going to enter the green dot, average penetration, and so on. Now, if I'd done it using the graphical, but I use label, right? So this is what we're gonna do now. The next step is this. So this is our next step. Our next step will be, right, stop loss. Okay. Now your stop loss and how much you're gonna risk. Okay. So what we're looking at now is risk management. R-I-S-K, risk manage. Yeah. So your risk management is, they said, basically 1% of your account. Now, I place some trades on risk management, and it's 1%. Okay, so 1% of account. Now, when I say 1%, all you've got to do is divide by 100. That's all you've got to do, and that will tell you. Okay, so say, for example, if I've got a £1,000 account and I divide by 100, right, you're going to only risk £10. Yeah. So therefore, you won't be able to take all types of trades. Yeah. You won't be able to take all types of trade. So what we're going to have now is this. So you see, I put risk management here, 1% of account size. Now, let me show you something, guys. If I move this, can you see it stays there? So every single time you move your chart, it will be there right in front of you. Yeah. So we can actually do it. So it basically sticks in front of you. You know your rules are there. You know exactly what you need to be doing. Of course, the others will move though. But so you've gonna, so when you're doing this, right, if you want to put the rules on it, you don't have to. I'm just putting it on now. Instead of using text, you put label, and label allow it to stay on there. And it won't move with the chart as the numbers of years are going. Yeah. So 1% of your account. So if I then look at, say, right, if I say look at, let me see. Okay, let me just see something here. Okay, guys, so I just need to search for, so I will have to do this differently. So what I'm gonna have to do, I'm gonna have to use a market that is basically not, that is open still. Okay, I'm gonna use a market that is still open. Okay, so this is what we're gonna do. I'm going to show you how we can use these dots now to place our trade and how we're actually gonna look at the risk. But you see over here, where you see this thing called, yeah, this is what we call average daily range, but this is what we call the average true range. Now, this market, and this is what we're going to use as our stop loss. Okay, this is what we're going to use as a stop loss. Now, if you see 843, this is like 843 pips. Now, say, for example, I was risking £1. This would be like 840 pounds, right? So I'm going to have to use another different market to do this, to demonstrate to you how we are only going to risk a certain amount of money, okay? And so on. So I'm just going to pause the video and then get to an account where we can actually risk a certain amount. Okay.
But wouldn't that be a good buy then? Because
no. Yeah, so this would have been a good buy. Yeah, because see the market going back up. But then, of course, because we'll also remember, you're mindful of supply and demand zone. Now, if you notice here that the market went there, come back down, the market went back up there, come back down. So that's the reason why I sort of taught you about supply and demand zone, so that you're aware of zones where this market might, because it has been there before and came down. If it go there, it potentially can come back. So you probably wouldn't want, but of course, there's a supply comes down, but still go way past this one. Yeah, of course we get a green dot, comes down. Yeah, but then I'm not worried about the green dot. I'm worried about the green dot. I'm not worried about the red dot. I'm worried about the green dot, because it's the green dot that's going to tell me. But remember, of course, I said to you that the green dots repaint. What do you mean by repaint? You might get one here, you might get one there. But what I try to do is I try and take them on this line, touching this line. And sometimes you want to jump in too soon. Yeah, and sometimes you might be there waiting, but it then takes off and gone and leave you because it didn't pull back to this point. Yeah. So that's where we are. But I'm trying to find something where I can literally take the trade. Okay. Okay. Right. So look, this one we could take, right? This is Aussie USD. Now, there are two ways we could take it, right? We could take what we call a limit order, or going straight into the market. What I'm going to do now, I am going to go straight into the market, right? But remember, this account, I'm risking, say 15 pounds on this trade, right? Because my account has only got 1,500 in it. What I'm going to do is I'm going to go to, and guys, this is the important bit, right? I'm going to go to start with 0.01. But of course, let me tell you something. This is Aussie USD, right? Now, for some of these, let me go back. There's one step I need to go back. So we're going to go back to Market Watch. I'm going to right click on Aussie USD, and I'm going to go to specification, right? When I go to specification, okay, you're going to see the minimum you can trade. So look, the minimum step volume is 0.01. Okay. Can you see that minimum? The volume step, the minimum volume step, yeah, is 0.01, right? Okay. The minimum volume is, not the volume step. The minimum volume is 0.01. Okay, let me show you what Apple is now. Let's go to Apple. So there's Apple. I'm going to right click. So right click on Apple, go to specification, And then what I'm going to do, I'm going to look at the minimum volume. So the minimum volume you can trade an apple is 0.8. Yeah. So that's the minimum volume you can trade an apple. Okay. Whereas for this one here, we can do 0.01. So an account size probably, unless you get a really good buy, with a small risk level, then you don't want to jump in. But say I'm only risking, right? I'm only risking, say, 15 pounds to take this trade. So I'm going to right click. So remember, you put 0.01, right? Then you're going to right click and then they're going to go to buy. Okay. Now remember, we'll get the green dot there, yeah? We'll get green dot now. We're going to put it to where the market is. So at the moment, let's move this up so we can see. At the moment where the market is, this now is, can you see that 6? If I'm going to buy there when I get my first green candle, okay. Okay, guys, there's one step that I miss out because we need to buy after we see our green candle, okay? So we need to get a green candle. So anyway, look now. So what we've got here, we're going to put our stop loss, right? The same number of pip as this one here. So can we see we're going to add 10 to this one. So that's 70. And we're going to add 10 to it. Okay, so look at where it is now. I'm looking to basically go away from there. So at the moment, if you look at the pips, so guys, can you see the pips there? Look at what I'm saying. It's right here. I'm show you something now. Look again. Can you see this thing that say pips of 887? Can you see 1026? Can you see 1500? Can you see those numbers?
It's very small, Marlon.
Okay, let me make it bigger then. I'm not sure if this one will show though. Let me see. Can you see? It's still going to be the same, but can you see this bit? That 7 point, that one. Let me see. Can you see 1894?
Yeah, just about.
Yeah, that's the bit there that I wanted to look at. Now, if you notice here, this is where the market is now, right? And look now, it says here that here we said we're going to add 10 to this when we're putting our stop loss. So if that's 70, we're going to look for 80. So let's see now what we're going to have now. So if you look now, guys, I'm looking to get this to be, at the moment, that's 100. So you're going to have to, you're going to knock off one of the numbers. So that's going to be 176. That's 176 pip. That up there is going to be 70 plus 10, which give me 80 pips. So I'm looking to get 80. So I'm looking. That's where I would have to put my stop loss. Okay, now if you look at your stop loss there, that's where you're putting your stop loss. If you look there, right, this bit is £6.46. That's what's going to be a stop loss. So what I'm going to do now, at this point, right, I'm looking to buy. So I've got my green candle. Okay. Now, what I'm going to do now, and there are 2 ways. Next week, I'm going to teach you the next way you're going to entry. But for now, this is when you're doing live trades, when they go straight into the market. You see the trade, you see you get a green candle, and you're basically going straight into the market. But you want to see, and remember, you look at the trade the night before. Okay, and you look at all your different markets. You're just clicking on all of them and looking at them. You see the trade. Then what you do is you're looking the next day to get straight into the market. You already know where it's going to be. So here now, I know that if I'm going to get into this trade and put my stop loss there at the 80 pips, right, stop loss, right, I'm risking for this trade, I'm risking £6. But let me show you something now. I'm risking £6, right? This is where I'm entering. But then this is where I'm looking to take profit. You see up above this line, that's where I'm looking to take profit, okay? So if I'm looking to take profit there, let me tell you now, this is where I'm entering. So let me enter since this is, I can enter here. So I'm risking, so I'm going to enter and I'm going to buy at 1. So that's it. I've entered into the trade. Okay, I can move this now. So remember, you don't enter the trade. You've got to work it out first. You know exactly where you're going to put your stop loss. And you know you're going to put it there, which is the 81 pip. But let's look at this now. Above here now, this is where you'll be looking to take a profit. Right above there. So you're looking to enter there and take profit there. Okay? Now, can you see? Look at that now. It's a 1-to-1 trade. meaning that I'm risking £5 to make £5. You understand? So to be honest, is it really a good trade? I probably wouldn't take it because it's what we call a one-to-one trade, meaning you're risking 1 to make 1. The best trades you can look at is trades where you're risking 1 to make 2. Because the more trades you can get where you're risking 1 to make 2, then the more likely you're going to be in a positive outcome over time. But if you're only risking 1 to make 1 and you lose 10 ones and you don't have any 2s at all, then your account is going to be down. You understand? So this trade in the first place, then we wouldn't take it because we're looking at our risk reward as well. And that's what we're talking about. We're talking about our risk management because that's the ultimate, that's the key to succeeding in trading. Okay? But remember, you wouldn't do this. You're not going to be doing any of this thing on a real account for now. You understand? You're going to do it on a demo first. Okay? So obviously, this is not going to give me anything that I like. So I'm not even going to look at this one. So this is Aussie USD. Okay, let's go down. What I'm going to do, I'm going to look at some stocks in a bit and see if there's any opportunities in stocks. Let's look at BT and see if there's it. Okay, no, nothing. BP, nothing there. Okay, like this one here now. Okay, let's make this one a bit smaller now. Now, say for example, right, this is up, that's up, and I got this trade here, right? And I buy there. Okay, this is say. And then you see, when you see you get like a red dot, then you probably want to take profit or tighten up your stops. But let me show you something now. Say, for example, this was where I was going to enter, right? Okay, so I go, and I did say this was say 0.01, right? Okay. And I put the trade on. I'm just going to put a limit order. Don't worry about limit order, but this is where I was buying first, yeah? So that was where I bought. Okay, I was going to buy there. Now, this is where it could potentially go, and that's where my stop loss is going to go, at the bottom of this thing. But remember, we're considering what? 49 pips, right? Plus 10, which give you 59 pips. Okay? Now, what I'm going to do now, actually, it's best if I show you this. Let me show you this one, actually, because I'm showing you when we go live into the live.
Sorry,
into the
does that 6 mean what, the 6-day moving average or something? What does it mean, the 6?
The 6.
The one that you're going to add the 10 onto for the stop loss.
Yeah. This is what we call the average true range. This is how much pips the market moves on average per day.
So 6, what does the 6 signify? 6M.
Oh, the 6, no, the 6 does represent the L60 token.
It says 6M, then it's got the colon 49.
Oh, no, 6 months, over a 6 month period.
6 months, okay.
Yeah, 6 month period. And this is like 1 month, and this is for the year, and this is the average daily range.
But we always use that one to work out the stop loss. Okay,
so that's what we use. So because people sort of put stop loss all over the place. So what I'm trying to do is just to define something that you should be following.
Okay, thanks.
Okay, right. So let me see. Right, sometimes don't forget as well, guys. Okay, if you look at this one here, goes here, you get the green dot to look into buy. Yeah. So let me show you. Let me use a different way to show you that one because, okay. So say for example now, right? I'm going to use a cross here to show you. Now, can you see now? Look at this. I will be risking the bottom there, so which is 60 pip. Yeah, that was 144 pips. I'll be risking there. But then to make, but it also depends, it depends on how much you're willing. Because remember, you could, even though it's 100 and say it's 60 pips, yeah. But you want to go at the bottom of you want to go to the bottom of the green candle. But say even though this is 60, but then this bit here, right? This is where we look for a buy, yeah. And this is like 135 pips. Can you see where you see that 1358 points? Yeah. That is actually 135, which is 2 times this 60. Because remember 70 and 70, 140. Yeah. But say when you work this out, right? When you work this out, this will say costing you, right? Say £12. Nothing is wrong with you still going in, but putting your stop loss to the low of this candle. So whichever one is lower, are they going to use this? But this is to give you an idea. Say the minimum it needs to be, but you need to go to the low of the green candle. Okay, so once you go to the low of the green candle now, which this is telling me 123 pips. Look at how much we're looking to make then. This is saying 500, this is saying 316 pips. So this is like 1 to 2. Yeah, so that's what you were looking at there. All right. But I'm still looking to see if I could find one that we can go directly in. By the way, tell me, let me see something. Let me see, tell me, what would I be doing here? So tell me now, Deborah, what would I be doing, buying or selling here?
Well, I'd look at the the moving averages at the bottom to see if they're above the 0.
Yeah. So what would we want to do then? What would this be telling us to do?
Then it buy. If it's above.
Yeah, but
buy,
would we buying? Would we buying?
No, because it's red here, so I would assume.
So this is red. This is also below. Of course, you could be buying, and it's above. Look, you see, even though we buy there, so we get that green there. So this, and then it goes up to there, and then we take our profit, and we get the first red dot. Okay, but we're gonna give you a bit more definition as we go along today. Okay. So what we've got now is we wouldn't be buying because, for one, it's below the average median. It's also, this is below the 0 and that's below the 0. So we'll be looking to buy at any point. Okay, let's see. Okay, right, here we go. Now, of course, this one now is starting to break below. Well, yeah, guys, sometimes what you do is, this is what you do as well. Right click and click refresh to refresh your chart. So therefore you're seeing exactly what you need to see, okay? And sometimes you can't see if this is above 0. Click on this to make it a bit smaller. So you can see that this is above. Yeah, this is now breaking below now. Okay. Now, because we could have bought there, but can you see it's breaking below? So, we'd have gone up. We could have moved there. We could have moved to break even. Yeah, I want to move to break even. It comes and stop us out. So we still probably would have, probably would making a profit, but wouldn't lose any money on this one. Okay, let me see where we know. Okay, now if the spread is fine because you divide up by 2, yeah? So the spread is 2 pips. Okay, that one is below. Okay, I can't seem to find any, but these are the currency pairs, yeah? These are the currency pairs. I just want to find something that I can show you with. Let me see if I can find something with this one. Nothing at all. Nothing. Okay, guys, I'm just gonna have to make one up, yeah? I'm gonna have to make up one up because I'm gonna have to make up one. I'm just gonna try and make up one. Okay. I'm just gonna make up one no, and because I can't find any at the moment. So this is here. I get a green dot, yeah. Here I get a green dot. Just trying to get this green dot a bit bigger. Right, I'm not sure why did it freeze on me just now. Let me get another green dot. Let me get another green dot here. Okay, right. Okay. Okay, let me go on. Let me get a bigger green dot. I just want a green dot to show you because I'm not finding any. The only way I probably could get one is if for some reason it's not making it big. Yeah, but say this was my green dot. This was the end of the day and I got a candle. Okay. Now I'm looking to buy this one. Now I'm looking, it says here that it need, okay, well, look, guys, guess what? Would I actually trade this one? You know why I wouldn't trade this one? Because the spread is huge. You'd pay 162 pips you'd have to use to actually get into this trade. And let me tell you something. XM Global is a thief when it comes on to spread. So you've got to be careful with the spread. The spread is how much you pay to get into that trade. Yeah.
How much is that? Did you say?
So if I was doing a pound a point, it would cost me £162 to get into this trade.
Wow.
Yeah.
What's a good amount for the spread?
No, you don't want the spread to be more than like, let me show you, like the GBP, it would be like, this is 9 pip. So you don't really want to get anything over like 12 pips. But of course, what you do, sometimes these pips doesn't really, because you're looking at in different countries. That's the reason why what I do is I show you a different way. So to avoid any confusion. Yeah. So I show you like, all right. So say I've got this 30.3. Yeah. Now, if I was to go and say this is 0.1 and I was going to put my stop loss there, right? If I was to say I'm going to look to buy because everything is above, yeah? So I was buying, so I put buy there. Now, you see what happens here now? If I then look and I say, if you see I pull this down, you can see how much money you're physically risking. So you're risking for this is 115 pips, yeah? So you're looking at 125 pips away. So this is your 125 pips away, yeah? So that is only risking £6.71, yeah? If I was to get into this trade, because that's where I'm putting my stop loss, okay? 115 pips away, plus the 10 pips. So that's where I'll be putting my stop loss away, yeah? So that's where I would put my stop loss. So what you could do now, you could basically put a little line here, okay? Now you know, so let me get rid of this now. I'm going to get rid of that, okay? I want to get rid of the, let's just move this slightly. All right, you know what? if I double click on this, then that's gone. So let me just delete the, yeah, so that's gone. So if I enter into this trade live now, I know I'm only risking 6. So yeah. Can you see how high up it goes? Because actually, in fact, let me show you now. If you go to view and you go to toolbox, you'll be able to see the trade that was taken just now, which is the GBP SGD, yeah? So GBP, there it is. It cost, and also, guys, if you want to arrange these in order, if you want to arrange them in terms of time when you did it, so like GBP SGD is the time when I did it. Yeah, that's the latest one. Okay, it cost me, yeah, it cost me £1.66 to get into this trade. Now remember, now what I'm going to do now to get my stop loss, I'm going to pull it down to this point, which is the 125 pips. Yeah, and remember we said we're going to take profit at the top of the this brown looking thing. So of course we're risking 1-to-1, yeah? So this wouldn't be a good trade. You understand? But don't be going there and putting on trade and then canceling. I'm just closing it because I just want to show you an example of what you're doing, okay? Right. Still searching because the stock market is closed now, you see. So all I can use is this one here. Okay, and the only Canada is closed as well. I was thinking of, no, Australia wouldn't be open yet. Australia's okay. Let me see. New Zealand CAD. Okay. No, these are all below, so we wouldn't be, you know, we'll be more looking to sell there when it breaks below, and this was below, and that was below, and that was below. Okay, let me see now. New Zealand chaff. Okay. Nothing there. New Zealand Jappy. Okay, New Zealand SGD. This is a 28 pip. Okay, so see we go now. So we get well, this is above, that's above, right? We get the red dot below, but we got the green dot. Okay, so I am going to take this buy trade here, but of course, can you see how close this is to this one? Yeah, so therefore it's like a 1-to-1 trade. So even though I've got the green dot, okay, and look, I'm saying I'm going to buy now. But what I do is I look for the smallest it can be, and the smallest this one can be 0.1. Now I'm looking again. I'm going to right click. I'm going to click on buy. And if I put it remember it's going to be 6 to 7 plus 10 give me 77 pips away from where the market is. So then if we look now, we look so that's, you know, that's the lower of the candle, because we've got anyone is whichever is lower, but the lower the candle is 133 pips. That's risking £7.10, right? Of course, say you wanted to risk, say you wanted to risk £21. If 0.1 is £7, can you see the £7.65 there? Okay, let me make it a bit bigger on the candle. Can you see now? Can you see here the bottom of this candle? Can you see that this is £7? The low of the low of this candle here, it's actually 142 pip. The 6 months there is 6 or 7 pips. So of course we could go up to the 6 or 7 pips from there. We could have gone all the way there, and we'll only be risking 80 pips there.
Sorry, are we supposed to be looking on the left-hand side for these figures? Because I can't see anything.
No, look at the left-hand side where you see the buy.
Okay, can't see it though, it's too tiny, but yeah.
Yeah. So can you see these numbers? Look at left-hand side and see. You see that pound GBP. Can you see that GBP? Negative 953. Can you see it?
It's too tiny. We can't see it, but
okay,
you can see there's figures there.
Yeah, let me close up. Can you see it now? Can you see £15, £16, £18? Can you see that? Can you see the money?
You can see something moving, Mon, but we can't really see the.
Yeah, I can see it. I've got 20/20 vision.
Okay.
With my glasses on, of course.
Okay. Yeah. So
we'll take your word for the figures because I can't see.
Yeah, so that's £7.33, yeah, which is 133 pounds. Now remember, we said we're only risking £15. What we could do, instead of only risking the £15, what we could do is we could say, okay, you know what I'm gonna do? I want to risk £15. That gives me, this is the low of this green candle. So remember, let me not confuse, because I'm saying to you, you can either use this bit here, the 6 or 7 pips, but what we want is we want to put our stop loss below the green candle. And this below the green candle is giving me £6. So forget about the pips. You understand? If you want to, just forget about the pips. Forget about the calculation there and say, okay, this thing is below the green candle. Yeah. And at the moment it's £7.60, right? Okay. I am going to risk for this trade £21. Now, if 0.1 gives me £7.60, now tell me now, right? Tell me now, Mark, what is 0.02 is going to risk if I leave it there? Because remember, this is £7. Let me tell you Let me tell you what it is. This is £7, £7.03. And this is at 0.1. So there it is, buy limit at 0.1. Right? How much I'm going to risk if I was to put it at 0.02?
Can anyone guess?
Yeah.
Is it double the amount?
Double the amount. So what's double the amount going to be? Huh?
How much was it?
It was £7. It was £7. £7 and it was £7.03.
Yeah.
14.6.
Yeah, 14.6. Yeah. So let me show you now. So if we put a marker there, right? So this is the £7. So it's just below the low of the candle, yeah? Okay, so if we then put it there and say, all right, so this is my £7, because even I can't see it, it's very low, yeah? So that's so if you hover over it like this, if you hover over it, you'll be able to see, yeah? So that's my £7, my £7.03.
You can't see through the dot,
yeah, to the numbers. So what we're going to do now,
can you make it transparent? I mean, just
what I could do is I could change the color I could change this to yellow, but then it would change that to yellow and these to yellow, you see, because that's the overall color of the writing on the chart. Okay, so but let me see if will this make, no, it won't make this part any bigger, it will only make the chart bigger. Yeah, so anyway, what I'm going to do, I'm just going to put a horizontal line there like that. So there's my horizontal line, right? And then if you double click on it, so therefore the horizontal line, it won't be deleted. So then I'm going to hover over this and then I can delete the buy, right? That's where I'm going to put my stop loss. So look at what I'm going to do now. I'm going to do this to 2. Okay. So that's 0.2. So I'm risking my 14 pounds. So what I'm going to do now, I'm going to put buy. But of course, you can see that's 28 pips, right? So that's going to cost me some money. So my recommendation is that you put the trade on your demo account first, and then you see how much money you risk and everything. And then so you make sure you keep 2 accounts, your live account and your demo. You put the trade on your demo first, and then make sure, and then you basically go on and you log into your live after, and everything is going to set up there. And you do exactly the same thing now. Once you look at the demo and see everything set and how much money you risk and everything, then you go on to the live and then you do it. So anyway, now we're going to go, even though this is 28, it's because we get the green dot and we get that. That's the reason we're going in. Of course, the risk reward is not very good because it's like 1-to-1 because it's in the middle. You want it about there. Okay. So I put a buy now. Yeah. Now look, I'm going to pull now. I'll put the buy in. I'm going to pull this down like that to this point, and that's going to give me my 14 pounds risk. Okay. And then I'm going to pull this up now, which is going to give my target, how much profit I'm going to make. I'm going to put it to the top there. So I'm risking 14 pounds to make 11 pounds. Not very good in terms of a profit target. Okay.
How are you seeing the £11?
Now, if you look to the left, let me move this 1 minute. If you look to the left now, can you see? Look at that. Can you see the 10 pounds? Can you see the 13 pounds? Look to the extreme
Oh,
left.
13.7.
13 pounds 76. See? Can you see it up and down there? Yeah?
So is that taken from where? From the top of the green
from
candle?
from where I enter the trade, because now I'm into this trade. Now it charges me 28 pip to get into this trade. Let's see how much it charges me to get into this trade. So if I go on to time, click time, it's going to give me the latest trade. It says New Zealand charged me £2.85 to get into this trade, which is very expensive compared to I'm only risking 2 pence per point. Sorry, 20 pence per point. Yeah. So this is how you would do it. Any questions? So guys, ask the questions now. Ask the questions now.
Well,
Any
I'm
questions?
I'm confused.
Please.
Why did you put your take profit there?
Say that again.
Why did you put your take profit there? Is
because this, remember, we take trades at the bottom here, and we take profit at the top. However, if it's keep on going like this one here, you would then move to break even. So let me show you a trade now that we could move.
So you'd have to sit and watch that trade happen then?
No, you'd go into the trade live.
Yeah, if you were in a live trade and you put the trade on, you put that take profit at the highest of the last point. Yeah. That means, as you said, to break even, you'd have to be watching the trade.
Yeah. But when you come back the next day, or say, for example, you put it on in the morning or the afternoon, then basically what you're going to do is you're then going to come, when you look at it before the market close, then what you do is you basically just pull this is your stop loss, you pull your stop loss up to break even.
Right.
And that's how you would move it to break even. Yeah. Any other questions, guys?
Yes, Marlon.
Yeah.
What are the green and the red dots?
Yeah.
When are they formed?
When are they formed? They are formed when the market is moved to an extreme point.
Right. So is it at the close of the day?
Well, it's not really necessarily the close of the day, but it's if this market is dropping, and then it collapses to a point. Then it shows you a green dot. That's the reason why I said what you could do is you could use the green dot along with a blue dot for you to enter. And when you get the green dot first, carry on.
That you get alerts sometimes on the
it gives you
charts.
Yeah, it gives the alert. Yeah.
Is those alerts where the dots come up? Sometimes I think on the computer and then the alert just comes up.
Yeah, that's possible. It could be where a dot comes up or where one of these breaks up. But what we're looking for is we want to get that green dot. Yeah. But remember, I said you'll get a green dot there. You'll also get a green dot there. But what we're looking for a green candle, and then we'll put our stop loss below the green candle and then target above to the brown line. But of course, if the market keeps going up, don't do anything. Just move it to break even And if you say, for example, say I'm risking, say, £10 to make £20. I'm up £20. I could move it to £10, so at least I secure £10 of the profit. Yeah. But what you've got to do now, though, guys, you've got to have to go on and look for those green dots for the market. Now, remember the times when the market opened. The market for the American market, it opens at 2:30 p.m. UK time for the stock exchange. The market for the UK opens at 8 a.m. So the UK and also Europe, 8 a.m. And on this platform, you're able to place trade at 8:10 a.m. Right? So you could be looking at your stocks from overnight, which market set up nicely and which market you're going to be really focusing on that day. Of course, sometimes the market might gap way up and you can't get in. You're going to have to leave that one and come to another one. But also, so what I do is I look at the market the night before because it's stocks, right? And then what I do is I then basically say, okay, I'm looking to get into Vodafone because at the moment there's a trade on Vodafone. Let me show you. I think there's a trade on Vodafone. Let me show you Vodafone. Yeah, there's Vodafone. Let me get Vodafone there. I think there's a setup on Vodafone. Remember, guys, also we're on the daily time frame, so don't trade any other time frame. We're on the daily time frame, okay? Okay, so Vodafone, this is above, that's above. I get my green dot and I'm into Vodafone. So if you notice there, so look at this. Can you see now that it's above this line? So everyone, tomorrow morning, if you're available at 8:10, I would like you to buy Vodafone. Yeah? And send that into the chat, into the group chat. And you're looking for stuff. So there's Vodafone there. Everybody know Vodafone, right? Yeah, so we're going to buy Vodafone. So you get the green dot. It's above this average median. Don't you see, this is below, but the fact that I get my green dot, but what one thing you must have, these two must be above the zero. They must be above the zero. When you get your green dot, you buy Vodafone. Now, let me show you now. For this one here, I am risking on this trade. Let me tell you what's the risk on this trade here now. So I am risking on Vodafone. So the risk on this trade here is £6. And I'm targeting, let me tell you, the target is to make £18. You understand? So can you see how it works there?
But the lines are red.
No. This is just the market is closed, right? This red line here. No, you're talking about these lines here.
Yeah.
Actually, when I get this green dot, this one was up there. Okay. But then that's the reason why I say, right, we get our green dot. These are the two main ones. A better trade is to have this one being blue and that one being, so you can actually wait. Of course, if you look here, you get the green dot. That's above, and you get the nice movement up. Yeah. And then we get a little nice profit there when we get that red dot there. But this, when you see the red dot in the opposite way, you probably want to take your profit now. Yeah.
So it also looks like it's going down into a downtrend. So the green before is higher.
This one.
No, so the last green. Look at the
this green here.
Yeah, the one previous to that is higher. So isn't that now going into a downward trend?
And it's at the moment, Vodafone here is in a range. So it goes up, come down, goes up, come down, goes up, come down. So, you know, so it's like between two zones. So it's going between there and there.
But the indicator at the bottom, it's kind of facing down on the zero.
Which one? This one here?
Yeah, it's quite
yeah. It's facing down.
Down rather than...
Yeah, it's facing down. But the reason why I've done it is because the risk is so small of £7 to make £18. Yeah. That's the reason why I'd probably take a trade like this. But of course, we had a blue line above. But you see, once this is above, that's above. Now, guys, you see the last bit now I need to show you before I go, right? Because you have already selected all of your stocks, right? You have already selected all your stocks that you're going to be buying. The final stage now that you need to do is this, right? You're going to go and do something like this. This is your final stage now. You're going to go to my FT Market, okay? I'm hoping you all have got this link, yeah? Because remember, if you don't use this link, they're gonna tell you that you've got to pay for it. So I'm gonna drop it in the chat for everyone.
Telegram, please.
Yeah, let me drop it. I'm gonna put it in the chat.
Telegram.
No, Telegram.
You want to put it in Telegram?
Yes,
Okay.
please.
Okay, let me get it.
Disappear from here.
Yeah, Telegram web. Okay. So let me drop it into the Telegram then. Telegram web. Okay. So yeah, I've dropped. Let me see. Let me get this. So you're gonna drop to Telegram, yeah?
Please.
Okay, and then so this is like our final stage. But remember, you haven't put the trade on it. You saw it and you see the setup and it looks nice. You can afford it. So then we're gonna put now Vodafone. So Vodafone, and remember Vodafone is also, I think, in America as well, yeah? So you got to look for the London Stock Exchange because it's London. You're not talking about the other country like the different countries, yeah? We're talking about London. Did I do London Stock Exchange? No, I did the wrong one, sorry. But then you can look and you can see the prices anyway. So Vodafone, the LSE is London Stock Exchange.
LSE.
So then what you're going to do, once you get onto this, you're going to go to profile. When you go to profile, this is what we want to see. We want to see a minimum of 40,000 employees. We also want to see that they've got a net income in green. Okay. And we also want to see that they're an established company, but of course they're top companies anyway. So then we see that the revenue is in green, you know, and it's billions in the billion. We want minimum 2 billion. Okay. So that's good. So the next stage now we're looking for now is we're going to go to Yahoo Finance. So Yahoo Finance, yeah? Yeah?
Okay.
So Yahoo Finance. So let's go to Yahoo Finance. I'm going to drop the link in as well. And we're going to look for Vodafone now. So Voda. It's a Vodafone London Stock Exchange, yeah? Now, one of the ways you could check to see if you're on the right one, that's 129, yeah? And let's go back to the chart. This is 128. So it's exactly the same thing, yeah? So then we go to Yahoo Finance. Let me just get the link and send it through to you. Okay. I've dropped it into Telegram, yeah? Right. So this is what we've got now. So so there's Vodafone. Now, can you see now the 1 year target it's telling us is that they estimate that Vodafone will get to 201. Okay. Now, also Vodafone is going to have an ex-dividend day on the 24th of June. They're going to be giving 6.04% away to their people who own their shares. We'll also get a piece of that. However, the profit to earning ratio is a bit high, but we'll talk the earning. Well, this is above zero. That's above zero, right? It's 36 billion. And also we get the volume is already that. But remember, you have already selected your stocks already anyway. So we're looking for this. We're looking, well, because we're only buying, this won't be a problem because we earn some profit from what we call dividend payment. So if you own this stock before the 24th of June, then you're going to get some of the 6% of the dividend. Their earning was already in May, but because their earning wasn't significantly good, that's the reason why. If you look here, you can see there was a drop in the share price because the earning wasn't that good on the 18th of May. Yeah. Here as we drop this here, 18th of May. Yeah. So because the earning, because if you go back to here, you can see where, if you go back to this bit, you can see that, look, that's all 96 million for a big company, you know, 96 million. And you've got a revenue of 37 billion. This should be at least even 1 or 2 billion, to be honest. So, you know, if you look at Apple and so on, if you look at, say, for example, some of those mobile, like, you know, because Vodafone is like a company like Motorola and all of that, they should really be earning a lot more than that, to be honest, you know. But of course, they're going to blame it on Corona. Yeah, so that's where we're at. So we'll have to make sure we check those, and then we're good to go. We come back, we put the trade on, we get up, and we walk away. Yeah.
Can I ask a question?
Yeah.
It's going to be. I'm just not sure, so I'm just going to.
Yeah.
Do you know when you said like for the 1-to-1, you said, do you know for this orange line where you've got the 2 orange lines in the top? What should it ideally be? Because you said 1-to-1's not
No,
right.
you want to get like the minimum I really want is like 1 to 1.5. So if I'm risking, say this here is this risk here is £7, yeah, I'd probably want 1.5 of this would be like 10 to 12 pounds. So really I would want it to go up to about there. If that's where that brown line, you know, this brown line here, that brown line and that brown line there, where it's going up, I would want it to basically be, you know, at least like if I'm risking £5, I would want to make £7.50. I don't really want to risk £5 to make £5.
Okay, thank you.
Yeah. So guys, what I know is
Sorry, do we need to take into account how much you're paying to go into that trade as well? So
yes, you've got to take that into account, and that's the reason why I said but of course, remember, if the market goes up, you will get back that money anyway, the spread, because that's what they do. They charge you the spread to get into the trade. But what you're gonna do though, tomorrow I need people to take this Vodafone trade. Is there anybody inside who will start working after 8:30 p.m.? Sorry, 8:30 a.m. Anybody start before 8:30 a.m.?
no, 8 o'clock I can start.
Yeah,
You start at 8 o'clock.
I can start at 8.
Yeah, I can do the trade for 8 o'clock. Do you want it?
Yeah. So because the market opens at 8, but this company here, XM Global, you can put your first trade on at 8:10, but probably 5-6 minutes later.
8:10.
No, 8:06.
Oh, okay.
Yeah, so it's the sort of delay on the XM Global, and also they close early, because normally with most companies they close at 9 o'clock. XM Global close like at 8:55.
Wow.
Yeah.
At 8:55 in the evening.
Yeah, 8:55 for the stock market, for the American stock market.
Oh, okay.
Yeah, and remember the London stock market that closed at 4:30, but on XM Global about 4:25.
Right.
Yeah. So if you've got like your break
again, can you say all the times again? So America closes at what?
At 9:15 a.m. Sorry, p.m. But on XM Global 8:55 p.m. And Europe closes at 4:30, but on XM Global 4:25. That's when that's probably the last you can put on a trade.
Okay. And the UK?
And the UK is the same as Europe.
Okay, thanks.
Yeah. And also just remember as well, UK is 1 hour ahead, or sometimes when compared to the rest of Europe. So that will also play a factor.
Okay.
So probably they possibly
1 hour ahead of EU.
Of probably the EU in some places, not everywhere, but some places. But what I really need now is for everyone to take this trade Vodafone, search for a few more from the markets that you've selected, and then all you've got to do for that now, you go, and this is on most laptops and computers, S&P, or you could print screen. So this is what you're going to do now for your homework. You're going to basically just do this. This is a trade that you've taken, and you do this now up to this point. So we can see all of it. We can see, so you can see the buy, and then you right click, copy, and you can paste it. Or what you could do is you could go to File, Save As, and say Voda Trade, and then save it. And then all you've got to do is to go back where you save it and then upload it. Understand? But also you could put this in your PowerPoint so you see what the trade looks like. And then also you could put the day when you buy it and everything so you can do analysis and see what the trades are looking like. Okay?
How many trades you want us to put on 3?
No, it's up to you how many you find. And remember how this is going to work to make everybody eat food from this thing is everybody needs to look for those trades for the markets that you're trading now. The ones that you've taken, that's the reason why I said that you need to take it all the way up to there. So if we can see this bit now, if we can see that it's Vodafone, then we can go off and go and look at Vodafone and see if that, you know, is one of the markets that we're interested in, and if our account size is big enough to take that trade. Because remember, you might be taking a trade, but I can't take it because my account size in terms of how much money I've got in can't take it. Some people can buy Google, but not everybody can buy Google because Google is very expensive. But like a Vodafone is very cheap. It's UK stocks are generally cheaper. It's only now, since I'm more experienced, I've started trading American stocks, because American stocks are very expensive.
So the spread you say should be what?
No, what you want is
what's the maximum spread that we should?
It depends, because for each stock the value is different because of the size. So like Google spread is going to be different too. But say for example, you put the trade on your demo first, right? And remember, you can close it if the spread is too huge, right? But you would put the spread on your you put the trade on the demo first before you go into the live. But since we're only doing it with the demo right now, for stocks, don't worry too much about the spread.
Okay. Can we go through all the points again of all the things that we need to do before we put on the trade?
Okay. What do you mean?
Okay, so obviously you put the trade on when it's a green dot.
Yeah.
And the indicators below.
Above, yeah.
Above.
Yeah, above the zero line, yeah.
Yeah, above the zero line.
And then once you've got that green dot that comes down to the brown line, then you go over to once you've got everything set up there nicely, then you go to this. Because why do we go to this? Because we want to make sure that we're not going and seeing this is some negative 20 billion. You know, then you don't want to do, because if this was red, because to be honest, we probably shouldn't buy Vodafone if you think about it. Because if they've got 37 billion and they're only making 96 million, that's just crap. Look at this. The revenue is really flat. The company grew net income from a loss. Well, actually, they had a loss of 920 million to a gain of 112. So they're heading in the right direction still, to be honest. Yeah.
How are they heading in the right?
Yeah, they're heading in the right direction based on the last income statement. But guys, I'm gonna go now because I've been talking since 5:30 today. Yeah, and I haven't stopped. So please get that homework done. Start putting on trades. Start advertising them in the Telegram group, so we can all see the trades that you're taking. You know, and there's only one person I've seen so far who have put trades that they've taken. All right.
Marlon, I did say at the beginning that I had a question though.
Okay, I'll just quickly ask that one, yeah?
Okay, well, my question was in terms of for homework 9, when we set up all these trades, and I did that, and I took the pictures and sent them to you. But when I actually went back to it, one of the trades, the German one, was no longer in the profile. So I thought, okay,
because what happened, if say, for example, this is what I've got Forex trade in there, right? If I go in here and I save profile and I click on save as, and I put a different name there, then it's not going to come as Forex anymore. It's going to come to the new name. You understand?
That might be how I've lost it, but I thought I could do it again, because all the companies are still in my market watch. So I was trying to just put them over into, using the wrong terminology, to do it again, but found that I could only put 2 trades in it. It wouldn't take more than 2. The rest keep disappearing. And I'm not quite sure what I'm doing wrong.
No, they shouldn't be disappearing, to be honest. Because all you're doing is, say, every time I close and open it, they should come back exactly the way they are. Unless you're going in consistently and then and saving and saving profile over and over, because every time you save profile, it's the one before is gonna be going and leave the one that you have. You understand?
Yeah, maybe I'm doing something wrong. But what would be the procedure then if you were taking some of the stocks from here and you wanted to put them into a profile? How would you do that?
Okay, so if I was to go into this, if I go into this, go to save as, right? Now, one thing I know is that this one is Forex trading, right? So if I go into save as and I call this, say, teaching teaching template, right?
Mm-hmm.
Okay. And then if I close this now, and then I go back to it to open it. Okay. So it comes back, right? It comes back, yeah, but this time it's called teaching template.
Right.
But if I basically was to do this now, right? So I went in and I was to go on and I click on this bit, and then I basically click X, click that, because I don't want these in, because I only want the ones that I'm using for teaching, right? And I only want the Vodafone one because that's the one that we're looking at, and we took another one, yeah?
Yeah.
So that's my teaching template now. So if I then put this like this, right? And I've got the Vodafone there, that's it. But if I close it now and I come back to it, okay, so there it is there. But then that's my teaching template. But if I go back to my original template, go to File, go to Profile, and then go to, I think it was Forex trading. Then my Forex trading should come back.
That's what I was thinking. It's in File, Profile, and then just click on one.
Yeah.
Yeah, but that's not really what I'm asking. Like where you've done that new one now, say for instance, one, two, say the three symbols at the top, if you wanted to add those into that teaching template.
So if I want to add them
to do, and it only will take 2, it won't take.
Okay, so what I do, I go to Profile, go back to teaching template. And then all I've got to do now, I want another 2 there. So if I need another 2 there, this is what I'm going to do now. I'm going to right click, say I want Adobe, right click, chart window, right click, chart window, right click, chart window, right click, chart window. You can put as many as you want to.
I was dragging and dropping.
No, if you drag and drop, it's just going to drag and drop into the part. See, if you drag and drop, you've got to right click. Yeah, so right click, chart window.
Chart window, yeah, thank you. That was it, yeah.
That's good to know.
Thank you.
Okay.
Thank you, guys. Take care.
Yeah, thank you. Okay, then bye, everyone.
Bye, Marlon.
Yeah, bye.
Bye.
Bye.